Looking at business ownership and unlimited liability businesses, going to look at sole traders first. And I've got this picture of this one person looking a little bit stressed, and they've got a lot of workload, and that is typical of sole traders. So first of all, what does unlimited liability actually mean? It's where the owner is responsible for all the debts of the business. So they could lose their personal possession if the business cannot pay the bills and any debts that they owe, because in the eyes of the law, there is no separation between the business and the entrepreneur, the sole trader. So they are, the assets that the sole trader owns are also, I suppose, the business assets, and the business assets are also the sole trader's assets. So sole trader, sole, the word sole means one owner. This does not mean that there is only one person working the business. They can have employees, that's absolutely fine. They could have a number of people working for them, but sole trader just means one owner. And they have unlimited liability as well. So some of the benefits and problems of sole traders: it's very cheap and easy to set up. There's no paperwork. You could set up as a sole trader today. You could, open a little business selling stuff on eBay if you really wanted to. You get to keep all the profit. Obviously, you pay tax on that, but you do get to keep all the profit, and all the decisions are made by one person. So there's no arguments or less chance for arguments. However, they do have unlimited liability, so they could lose the house, they could lose any assets that they own. It's a lot of workload for that one person. Remember that picture I showed you at the beginning? And there's limited capital. Capital is money that you've invested into the business. Because there's only one person, one owner, there's only the owner's capital that they've invested into the business. So they might find it hard to expand the business, to purchase things that they need to run that business. They'd have to look for other sources of finance, such as loans. So here's a past paper question about a business called Bookbase, which is a bookshop owned by a sole trader called Yasmin. And one of the questions was, what was meant by sole trader? So I would have been stating that it means it's got one owner. Yep, that's the mark scheme. And analyse the impact to Yasmin as operating as a sole trader, 4 marks. So it is very specific. They want to look at the impact on Yasmin to get the full mark. So it's not just knowing the theory, it has to relate to her. So here's the mark scheme. As a sole trader, Yasmin will get to make all the decisions. That's something I wrote about before in the benefits. For example, that's what they've included there to get these second marks: the type of books that she's are to be offered or to be sold. This means that she's able to keep full control of her business, and as all the decisions are hers. That's just one of the points, one of the suggested points. There are other points that you could make as well. Another impact to Yasmin could be the unlimited liability, this huge risk that she faced. This means that any assets that she owns, I don't know if it says there was more to this case study than just this, but you could actually mention one of those assets that could be at risk if she went out of business.